Most investors are not even aware that you could invest into an SEC-regulated mortgage fund. In other words, our niche is in three categories. Well, we specialize actually in five categories, but the three are the primaries. Our primary niche is in mortgages, and these are residential mortgages, multifamily mortgages, also commercial mortgages, and we buy them nationwide. We bring them under management. Our AUM is quite extent because we buy mortgages from throughout the country, and they are generating passive income, or if you will, monthly cash flow for our investors, and I'd like to talk to you about that. This is not a real estate investment per se. This is a real estate alternative investment, all right? Every investment that is in the fund is backed 100% by real estate, and every dollar you invest into the CEO fund is backed 100% by real estate. The CEO fund, as I mentioned to you, we're located here in the state of Florida, the mighty state of Florida. We used to have offices in San Diego and in Florida, but we have migrated everything to Florida. We like it here. We like the sun. We like the weather. It is just beautiful here. I feel like I'm always on vacation here in Florida. 72 hours after an investor invests into our fund, we then make asset acquisitions. The acquisitions are mortgages, residential, multifamily, or commercial. Within 72 hours, that money is at work. We do not play around. And I want to tell, ladies and gentlemen, from day one, the minute you invest into our fund, you're making money from day one. That is not the case with many other investments out there. We work out the loan arrangements and the value additions of the mortgages into the fund, and then we start distributing the money. Technically, when an investor invests, 21 days after you invest, you'll then start receiving your monthly distribution. Usually, the fund is sending out ACH payments, bank wires, but preferably ACH payments and bank wires, digital disbursements, every fourth Friday of the month. You can look for it. You can sleep at night, you can golf during the day, take vacations. This is a turnkey operation. It just simply keeps running like the ever-ready battery. Once you invest in this, monthly distributions are available to you. And we have investors that do request from time to time that they do not want any disbursements. They simply want compounding interest. We have quite a few clients that are like that. I'm not sure why that is the case, but many do request that they simply want compounding interest instead of the preferred monthly distributions. We also offer quarterly distributions if that'll make an investor more comfortable. One thing I do want to point out, my marketing team forgot to put this here. As you can see that blue dot there, what it's supposed to say under here is that there are no entry fees. Unlike a mutual fund, ladies and gentlemen, where you pay a front-end load, usually between 3 to 5% to invest into that mutual fund, and usually 3 to 5% to set that mutual fund to withdraw your money. You pay a fee up front, you pay a fee going out. We do not charge entry fees, and we do not charge exit fees. When you invest 100% of your money, 100% of it is fully invested. At the end of the 3-year term, we bank wire you back 100% of your principal, period. And it goes right back to wherever you tell us to direct it to. There are no fees deducted. This is over and above your monthly distributions. So for 3 years, 36 months, by month 35, our fund usually reaches out to the client and asks the client, would you like to stay another 3 years, exercise your option to extend your position another 3 years with us or 2 years with us, or would you like to terminate the contract? If they do, at month 36, we send them their final distribution, and within 15 to 21 days or so, their principal is wired back to them. And this is the beauty of this type of investment. To give you a little further background about our fund, we have expert analysis, proven experience, unmatched efficiency in this particular area, this particular space, which is the mortgage space, the mortgage investment space. Total return equals cash flow plus the appreciation, and I'll explain. For example, the CE fund, we own mortgages. They're in first lien position. However, because the mortgage is backed by the house is appreciating in value. This is a wonderful thing because as the house appreciated in value, it gives more security to the mortgage. To give you an example, let's say that there's a $100,000 house. Let's say that the CEO fund owns the first lien position mortgage valued at 85,000. 3 years down the road, let's say the house is now worth $110,000. That increases more equity in the house, even though we own the mortgage at 85. Let's say that in 6 years, the house is now worth 120,000. Gives even more equity in the property that our mortgage is on. I think you understand the circumstance in this situation. So this is a far more superior way to invest, ladies and gentlemen. Makes far more sense. It's far more prudent. And this is what the smart money is looking to in this upcoming third quarter. Returns are driven by income and asset value, not market consent. Very important. Now, why passive investors are reallocating? They're seeking downside protection. Why not? We're in a volatile market right now. Capital is moving towards stability. And this is the main thing I wanted to encourage everyone today about. That if you are considering investing this particular quarter into something that you feel confident about and feel a little safer about, then you should consider investing into producing assets. Producing assets are different than Wall Street, Dow Jones, NASDAQ type of Wall Street products because it is asset backed. You don't have to worry about losing all of your principal. Focus on income and capital preservation is gaining a significant ground. This is why we're now raising capital for the fund, the CEO fund, and this is why we're doing webinars to make more investors nationwide aware of a different diversification of investment in real estate alternatives, such as a mortgage fund, which is the CEO fund. That is our niche. Increasing demand for predictable returns is becoming a thing, and I do mean a major thing. More and more investors are more concerned about their money, making them money safely with security and backed by hard asset. Real estate provides stability in uncertain times. Most investors know this, but specifically mortgages. And I'm going to just take a little moment and talk about this. One thing about the mortgage business, it was not affected in 2019. Ladies and gentlemen, we were raising money and doing business in 2019. And to our amazement, we had not one single issue. Every single mortgage that we own, meaning residential or multifamily or commercial, was paid by the borrower. We had no problems. We literally do the same thing that banks do.